Oil prices stabilized on Monday, but the overall sentiment in the market remains bearish. Starting from January, Brent crude has lost almost 20% of its value. On the other hand, the ruble is actively gaining ground in the early session. It seems that safe haven assets are losing their appeal as traders tend to choose the cheaper currencies of emerging markets. In the early trade, oil has attempted to resume growth. However, the bullish trend did not last long and oil prices slid again to the red. As a result, Brent quotes dropped to $54.13 a barrel. Likewise, WTI displayed a slight decline and has settled at $50.09 per barrel. Markets are still influenced by the deadly coronavirus outbreak in China as traders continue assessing the possible impact of the epidemic on the country's economy. The Wuhan virus has already affected business and industrial activity in China and other Asian regions, causing a sharp decrease in energy demand. Meanwhile, the OPEC Plus is still hesitating to announce its final decision on output cuts, keeping the markets alert. First of all, the cartel has not yet agreed on whether to move its policy meeting from March to early February. What's more, Russia seems to be reluctant to follow a recommendation from the OPEC's technical committee. Earlier, the committee has advised the grouping and its allies to cut oil production by a further 600,000 barrels per day. This uncertainty puts additional pressure on the oil quotes. In the coming days, market participants will focus on the monthly oil market report from the OPEC and International Energy Agency. Traders will particularly look for the data which will help assess the supply and demand balance in the energy market. The demand for the ruble has significantly increased at the start of the new trading week. Traders were actively buying the Russian currency that has lost 1% when closing the session on Friday. The ruble edged lower mainly due to the strong US dollar. The Russian currency can be supported by the local factors if the Central Bank of Russia reduces its currency interventions on Monday. The dollar-ruble pair was trading at the level of 63.82 at the beginning of the trading day. Uncertainty in the oil market continues to weigh on the ruble. This week, both oil and the ruble will be sensitive to the news about coronavirus. According to reports from China, the number of fatalities and new cases of coronavirus has increased dramatically over the weekend. The ruble has finally got a chance to recover amid positive news from S&P Global Ratings. The company has confirmed Russia's stable credit rating. The good news, however, may be overshadowed by the overall negative background. The appetite for risk among investors remains rather moderate. Today, the ruble is expected to trade in the range between 63.5 and 65 in the course of the session. That's all for now. Thank you for watching and stay tuned.